Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz, as we get everything you need to know in 90 seconds at 9 o'clock with news that trade chaos and tariff war skirmishes have markets worldwide watching for inflation signals as much as growth signals. First, in the US, their Red Book Retail Index was up 6.1% last week from the same week a year ago, driven increasingly by tariff tax price increases, which is why this metric is diverging so much from the formal retail sales volume data. And the Richmond Fed's regional factory survey came in negative again in May, with activity slowing and new order levels still quite weak. The service sector report for the same Mid-Atlantic region was weaker too. In both cases, they recorded price pressures over 6%. And the Dallas Fed Services survey was just as negative, in fact even more so. Input prices are a real issue here too, over 5%. And the minutes of the May Fed meeting released overnight revealed policymakers are uncertain on how to assess the future risks of inflation and their labour market, and how they can meet their dual mandate when forces are pushing in different directions. They seem to see the inflation risks are the key priority. They're also watching the US dollar depreciation because that too brings inflation risks for them. It is a waiting game. Euro area inflation expectations are rising again and came in at 3.1% in the latest survey for April for the ECB, results they won't have liked. These expectations are back to early 2024 levels, unwinding the progress the ECB policymakers thought they had won. In Australia, their monthly inflation indicator, also for April, shows it stuck at 2.4%. A small easing was expected, but didn't eventuate. But 2.4% isn't a killer level and probably doesn't change expectations that the RBA will keep reducing its cash rate target, currently at 3.85%, by another 25 basis points at the next meeting on July the 8th. A lot could change in between, however, and analysts will be watching for upside risks. And the US Treasury 10-year yield is now at 4.48%, up 4 basis points from yesterday. And the price of gold will start today at $3,296 an ounce, down $6 from yesterday. And oil prices are up $1.50 at just on $62 a barrel in the US, while the international Brent price is now at $65 a barrel. And the Kiwi dollar is now at 59.6 US cents, a small 10 basis points rise from yesterday at this time. Against the Aussie, we're up 50 basis points though, at just under 92.8 Australian cents. Against the euro, we're up 30 basis points at 52.8 euro cents. That all means our trade-weighted index starts today at 67.9 and back up 30 basis points from yesterday. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.